I'm Charlotte McLeod with the Investing News Network, and here today with me is Lobo Tiggre, editor and founder of IndependentSpeculator.com. Thank you so much for being here in person with me once again. Great to see you.
I'm glad to be, and there's a lot going on, so I'm glad we have this chance to talk.
There is a lot going on. So we're here in Florida at the Rural Symposium, and really I think it came at the perfect time. I don't know if it was intentional or not, but we had the Fed meeting yesterday. We got our rate hike of 75 basis points, which I think was widely expected. Lots of chatter around that, and I know that it's difficult to talk about what's going to happen in the future, what's coming next for the Fed. So I thought I wouldn't go there and instead ask you more about what do you think is the mainstream impression of how the Fed is doing?
Ooh, mainstream impression of how the Fed is doing.
Because I know what we all think
right,
here.
Yeah, right. So yeah, the gold bug take on it is different from the mainstream. So pulling back actually from the immediate causes, the short answer to the question is the mainstream still seems to be drinking the Kool-Aid served out by the powers that be, which I think is actually very dangerous to mainstream investors. And it's not just that the Fed did as expected. I think in this particular juncture, and particularly going into the quiet period until no meeting until September, there would have been a high price to pay to rock the boat one way or the other. If they had gone less than, because of some of the weakness in the economy, they would have spooked the markets. Only 50 basis points. Oh, something must be wrong, right? Or if they go 100, oh, but there's signs of weakness, so they're really going to kill the economy. So they did what the bond market vigilantes gave them permission to do, if you will. Therefore, the broader market perspective is, yay, Fed. They're doing the right things. Everything's fine. And, of course, I don't agree with that, but it's important for us as resource investors and speculators to remember that the traders who trade futures contracts on the COMEX or wherever, whose prices we mistakenly refer to as the price of gold or silver or whatever, they're not like us. They don't think about things. They look at the mainstream perspective. So your question is highly relevant in terms of where do our investments go from here. So let's get to that. It's not just the Fed. We had the ECB too.
Exactly.
And that was not as expected. That was a big surprise. And I think it was a big surprise for everybody, bears, bulls, whatever. The question was really 25 versus nothing, not suddenly 50. So that boosted the perspective of the ECB fighting inflation there, which boosted the euro, which helped gold, because as both are alternatives to the dollar. And now you have the Fed not really softening policy, not going easy necessarily, but not being aggressive. And here's the critical thing. Like the press release came out, and as usual, there's a little bit of wiggle in the market, but not much happened. It's all about the press conference. And I'm watching this live, and I'm taking notes minute by minute. Right at 2:36 p.m. is when Powell said, yeah, we might go more next time, but we expect to slow the pace of increase. And that was when the markets really respond. Now, he defined that later. He said that he thought that maybe by the end of the year, 3 to 3.5 would be, if not the terminal rate, but about right. That implies, we're already at 2.5 right now, so 3.5. One more 50 could put you at 3. So that implies much smaller rate hikes in the next meetings, which is yay for Wall Street. On the other hand, it also implies a weakened economy. So very interesting response. And I'm trying to summarize this for our audience here. It was no surprise to see the broader markets take off yesterday on the Powell speech as much as the FOMC. It was a little surprising to see gold and silver do as well as they did, because yay markets is usually not yay safe haven assets. But there was that sort of darker side of the recession too. And then today we get this GDP print.
All right, so you mentioned that it's been confusing, and I think it is, for me at least, it's still quite confusing about what's going on. And the recession question really seems to hit that point home. We had yesterday in the press conference, Powell being repeatedly asked, are we in a recession? He ended up saying no. Today, we have our GDP numbers, which show that, in fact, yes, we are. So can you talk about that a little bit, and why is it so difficult to nail this down?
Okay. Well, the answer to the last question is, of course, politics. there are interested parties here who are trying to move the goalposts around. And there was a political cartoon out just a couple days ago where there's like the Titanic headed for the iceberg labeled recession, and the lookout in the front is saying, iceberg dead ahead, and Captain Biden is saying, well, that iceberg may not fit my definition of iceberg. So politics and reality does matter here is the good news. Let me pull back a little bit though to really try to address the question of why does this not make sense? Why has high inflation been bad for gold? Just doesn't work for gold bugs. It's supposed to be an inflation hedge. Right, so let's think about what is an inflation hedge. And one way of putting this would be if you were going to put some wealth in a box, you thought you were going to go into a Snow White slumber for 50 years. What would you put in that box to have when you came out 50 years from now? Paper? Probably not. Gold would be a good candidate to put in that box. In that sense, big picture, what is an inflation hedge? It's something that is going to have value no matter what. Maybe the price goes up, maybe it goes down, but it's not going to dry up and blow away. I mean, maybe if you're a Bitcoin maximalist, you put a drive stick with Bitcoin in there. But that's unproven, whereas gold and silver, thousands of years of history of working in this way. And if you look at gold and silver over the decades, you can look at the depreciation or destruction of value of any currency, not just the dollar, and look at the prices, gold-dollar exchange ratio, as I like to call it. And you can see that big picture, they're doing their jobs. The currencies are losing value. The commodities and metals have gained in price over that time. That's the thing to keep in mind. In terms of an inflation hedge is not necessarily something that on a day-to-day basis moves inversely to inflation, or even on a week-to-week basis, and even on a yearly basis, what we have seen, and it's a pattern we saw back in the 70s too, which we should come back to, is that gold will often lead inflation. And so when gold took off big time this time, it was in 2020 when you could see the inflationary writing on the wall, or anybody unbiased or not driven by politics, could see that what the governments of the world were doing was highly inflationary. And so gold moved in advance. There was an expectation. And where are we now? Like, okay, now we have the reality, so people think that gold should be going up more. Well, but A, it led, and B, the expectation now, which goes to your very first question, the mainstream perception here is that, the Fed is winning. It's already talking about slowing the pace of rate hikes. That must mean that inflation is coming under control. PCE has gone down even if CPI has gone up a little bit. There's a way to kind of convince yourself that the Fed is winning, even if the last print was record high, right? So this is really, really important, I think. One of the things that happened in the 70s was that everybody and their cousin was buying gold. The expectation, well, not buying gold necessarily, but they were in this, and the expectation was that anything that you could buy that wouldn't go bad now was better to buy now because tomorrow will be more expensive. And that's not where we are today. The latest consumer sentiments, never mind the Fed or the White House or ECB, the consumer sentiment was actually a big decline for inflation expectations 3 and 5 years out in the last numbers. So the consumers, the mainstream, is still drinking the Kool-Aid. That initial question you asked, they think the Fed and the powers that be are going to fix this. I think that's wrong, and I think they're going to discover that soon, and I think we will see expectations like we saw in the 70s. And that, I don't know the future, but I am betting my own money on this outcome. I think people will wake up and smell the napalm. Holy cow, look what's going on. Those expectations will set in, and I do think we'll see much higher commodities as stagflation in general, and specifically gold and silver monetary metals. I do think we will see a breakout higher.
Okay, so you've been talking about the relationship between gold and inflation, and like you mentioned, when we see high inflation, we expect a higher gold price, and when it's lower, it's kind of like, okay, that doesn't compute. We also have a strong US dollar right now, and that's one that does tend to compute, because when you see a higher dollar, you think, okay, yeah, the gold price should be lower. But I wondered if you could contextualize that for us, that strength in the dollar, because I think that's probably important to understand.
Sure. Well, I'm sure the audience already knows and understands the strong dollar only means less weak in the Forex markets. It's strong compared to other currencies. That doesn't mean your dollar is actually buying more. Even the government massaged CPI numbers, even those are telling us that your dollars are buying much less. Sorry, tricky Dick Nixon, you were wrong. Your dollar is vastly weaker over time. That's the reality that we know, we understand, and therefore the question. But where we are today, and again, the traders out there, these people trading futures contracts around and the LBMA and so on, they're looking at the relative strength of the dollar. And that typically is seen as a headwind, has been, especially over the last year. And sorry, bigger picture, the stronger correlation, as we've discussed before, is real interest rates, because that tells you, in theory, forward-looking markets, that tells you where the dollar is going to be. But ultimately it comes down to the dollar and the gold-dollar exchange ratio. What's happened is things have been so chaotic, off uncharted waters in recent years, that people have started looking less at the real rate and more at the dollar directly to gold. And we've seen that, the charts are almost like Rorschach diagrams with gold and the dollar, how sharply, inversely, on a daily, weekly, monthly basis they're playing out. So that's a headwind. No beating around the bush there. And right now, until this shock ECB thing, that strong dollar thesis seemed like it was going to be a major headwind. Now that's an open question. Who's going to be seen as more hawkish going forward? And even the dollar milkshake guy, who I interviewed recently, said that if the perception is, or if the reality is, that the Fed is less aggressive than other central banks, particularly the ECB, that his very dollar milkshake theory would go into reverse.
Okay.
Right? So that headwind could turn into a tailwind if, that's an if, right? But that aside, again, the reality is that all these currencies are weakening. And in real terms, reality does matter. And if, as I'm saying, people are going to wake up and smell the napalm and realize that stagflation, as you and I speak right now, quasi-officially, we are in stagflation. We have record high inflation. We have the trigger of the technical definition of a recession and high inflation. It's stagflation right now. Now, does that have to send gold and silver to the moon? No, but what's the nearest comparable? Everybody's talking about the 70s, and everybody knows what happened to gold and silver. So even just that expectation that, well, last time we had stagflation, gold and silver took off. Well, I want some of that. You can see people allocating on that basis alone. So I think actually several tailwinds and confusions that we've been having lately could resolve themselves in our favor as gold and silver bugs. But again, the important thing is I own bullion for safety. It's insurance. Right? I'm not looking to buy gold and silver ounces because I think the price is going to go up. I buy them because they're gold and silver, and no matter what happens, I still have that value I can hold in my hand. It's speculating on the stocks that I want leverage on those price movements. So I'm actually pretty excited. And given, this is breaking news, folks, given that the markets didn't freak out on the Fed news, we'll see what happens with the GDP as things sink in a little bit. But if the markets hold up to this GDP news, I think the odds of a major crash or waterfall event that I think we've discussed before actually recede quite a bit, and I will be looking to buy. If things don't melt down in the near term, I've got a shopping list, I've got cash I've been saving up, and I'm preparing to buy. So.
Okay, I think we've really unraveled a lot of things that people are probably wondering about, and it does feel like many topics that we've been discussing for months or possibly years.
Things are coming to a head.
They are. And so thank you for going through all of that. I think as we're wrapping up, I'm going to end with a little bit of a fun question, or at least I believe that it's fun. When we spoke at PDAC, we did kind of a deeper look at uranium. And I know everybody always loves to hear from you about uranium. So we did all of our questions then. I think we went through the market quite well. I wanted to ask, I think that uranium investors tend to be quite well informed. They really follow the market. But what do you see, what question do you, or what topics do you think people still need to learn more about?
Yeah. Well, so I'm going to take your question a little sideways from that.
Sure.
I agree with you. Uranium bugs are the research they do, and they help me, honestly. My Twitter feed is a useful source of information for me, because there's guys on there who know more about uranium than I do, and they feed me information. That's awesome. So key thoughts for uranium bugs right now is I'm not quite ready to say that the 2 steps forward, 1 step back pattern that we've been seeing for years is now bottomed in the step back, but it might be. We are seeing data that's, I mean, the mid-40s here has held up really well in the face of strong headwinds and fears about the market. So the other positive thing is that we've seen some signs of the uranium stocks ungluing a bit from the mainstream equities markets. And that's important because the fundamentals for uranium are very different from just about everything else in the markets. And yet you have this, again, frustrating, confusing pattern of uranium will be up one day, spot uranium will be up one day, but the uranium stocks will be down that same day because the broader markets had a bad day. They had a bad hair day and uranium takes the blame somehow. Stocks are stocks. People are selling stocks. They'll sell uranium stocks. And particularly if the news is economic, there's this perception that, the energy sector will go down in a recession, right? But that's wrong, I think, for uranium. We all know, uranium bugs know it's different because baseload energy, and it's more impervious to the ups and downs of, say, gasoline, which you can decide not to drive on a holiday this weekend, whereas you still need baseload power for your hospitals and so on. And it's also different in that uranium is still below the cost of production needed for almost all, not all providers, but most of them. So demand is increasing, the supply is not there and cannot be there at current prices, which is not even the case for silver and other beat up metals right now that have corrected. You can still make money mining those things. Copper as well, as much as it's corrected, the better miners can still make money there. Or not even just the better ones, a lot of them can still make money there. Whereas uranium, almost nobody makes money where we're at. So uranium really is different. And the point I'm getting to is that I'm encouraged by how well the current bottom has held up, and maybe it's looking like it's carving out that bottom and hanging up. And the other thing I'm encouraged by is that there are early signs that the stocks, the uranium stocks, may be coming unglued from that broader market. And if that does happen, I'm not calling this yet, but if it does, watch for this. If the uranium stocks stop getting whacked every time the broader markets get whacked, that's really bullish. Because that means the broader story is getting out there, investors realize this is different, and that would be very, very good news for our uranium investments. And of course, I'm very bullish. It's absent a major nuclear accident. I always caveat that this is a speculation. It's not a sure thing. It can literally blow up on us. Therefore, this is speculation. But that aside, it is one of my, let me not mince words. It's my highest confidence trade. I think I've said that before. It's still true. I do think we'll see materially higher uranium prices by the end of this year, not that far away. And within a year, I think, I will be I've said this before, what does that mean? I'll be very surprised. I'm trying not to make a prediction or a promise that no mere mortal could do. But my conviction is very high. I am looking, let me put it this way. I have a shopping list I mentioned before. I'm looking to deploy in the near term. The top of that shopping list is uranium stocks.
I think that sums it up quite well and a good note to end on. So thank you for coming by to help us explain what's going on in these very confusing markets, and also to, I guess, reinvigorate our uranium confidence. Not that most people probably need that, but thank you.
Well, uranium bugs are almost like Bitcoin hodlers. And I don't mean that in an insulting way. I mean, you talk about conviction. Yeah. Those hodlers have conviction. You got to give them that. And I think that's actually a positive, that uranium bugs don't get spooked by the moment of the day. They're not like, I'm done, I'm out of here. So credit where due there.
Of course. All right, well, thank you again. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Lobo Tiggre with IndependentSpeculator.com.